we would want also to take a good look at that chart. This is the daily. This is where we are today, actually, right here, 125.55. Now, in order to go to 126, what we've been seeing on the 4-hour charts and the 30-minute chart, this is the kind of momentum you're seeing on the daily. Very, very strong. Okay, so of course, it's a top out. It's called a top out. It means that you had a very strong momentum spike. Now there are lower momentums. You're going to have a higher price to make a divergence with this momentum plot. The fact that it is still stable means that the move is really still strong. Anyway, usually if there is a top out, we expect it's going to take the form of an ending diagonal. Retractions are going to be very, very contained. We expect to climb on top of that secular neckline. We'll be looking at this secular neckline on the weekly. We have to test 128, not even 126. It's only at that point that wave 3 is finished, and we can consider we're going to be doing some kind of a strong correction 4. And of course, over here the labels are really very speculative. So you will find that we have labeled the 4, then we have labeled the 5, then we have labeled the high degree. Doesn't really matter what you label them. It's only at the neckline that you expect to see a double head. Now that double head can be on top of the neckline, usually can be right in the middle of the neckline. Again, for us traders, doesn't really matter at this point. We're only targeting 128. We really expect to see 128 before release of the Federal Reserve interest rate statement in May. Let's take a look at the market. Okay, so we're only, of course, now that we know all the structures, we're only interested in 30 minutes and the 15 minutes. So we're not even having negative momentum on this one, on the 30. Okay, so the labels here get interesting. You can see that we are adamant that there is a 3 here and not a 5. Where is that 5 all the way up? Because of the momentum plot. Okay, so the momentum plot is continuous. It shows one continuous cycle. Internally, it will actually divide into a 5 into a 3 and a 3 into a 3 at that point, for instance, and the 5 into a 3 at this point, for instance. And even that 3 into 3 will have internal 3 segments. We only go with the momentum plot and the fibs, meaning that so long as we're having a continuous momentum plot, it only breaks here into a 4. You can see it became a bit negative, and it's trying to do a B now, and it will do a C, and this is what makes it a level 4 that will be contained at level 1. So long as we had such a very consistent momentum cycle, consistent means it did not get broken in between. It means that it has to have one label, nothing more. You can choose any label, of course, you like, but it gets that one label. At this point, it gets a wave 3 label, and the current correction is really a wave 4 label. I just did a 4A, it's going to be doing a 4B, it's going to be doing a 4C. These are going to become buy entries very soon, and then we move higher into wave 5. Of course, wave 5 does 127.2 at least of that move from level 2 here all the way to level 3. So this is yet a 4A. Again, there's going to be a 4B, there's going to be a 4C. Very lengthy. Okay, we could do projections, but it suits fine so long as there is a positive momentum plot on the 1 hour and 4 hours. That we just leave by entries at 124.70. Actually almost got filled. We had an entry, the market at 124.78. So we can consider to buy 124.90. We can consider to buy 124.70. Really, a wave C will try and do a bit lower than 4A. Okay, we expect to be contained at the top of level 1. This correction is going to go on until tomorrow, most probably. If we don't get that fill, so let's say you are going to be re-entering the market. If we don't get that fill at 124.70, tomorrow we go to 15-minute chart, Asian time, and buy pivot levels. Right now the market is trying to support on today's pivot level. So because there is correction, by tomorrow the pivot level will be 124.4. or 50% between the current pivot level you're seeing here and the S1 level. If we're already long, there is no, my personal take on it is that there's no cause for alarm. We just hold at least to 126. Just check these levels here. We're looking at 126.20 and 126.30 and even 126.70. If you want to protect the position that you're holding, the longs, alright, if the market falls below that level, 123.20, we are now at 125.20. It's a lot of points.